Hey guys, my name's Matt from zenandtheartofTrading.com, and today I'm gonna follow up on last week's video where I broke down how I perform my top-down analysis each day. And yeah, we'll see how the market played out according to the analysis I did. So let's start on Euro Yen on the daily chart. You can see that price did react from this level. We got a nice bounce off this level, just as I thought we would, and we also struggled to break this high, just like I thought we would. I might play a clip real quick from last week to show you what I was seeing in here, and then I'll continue with the analysis.
This is similar to Euro Yen in that we're hovering around a key support level, and we could see a bounce off here. Now, I don't like, see, we got this minor resistance level up here that's going to probably act as a suppressant on price in the short term. But on Aussie Yen, we don't have that, or at least it's much higher.
And so pretty much what I thought would happen happened. We struggled to break this high, and then we did break and close below this zone into the wicks. But this break isn't convincing enough for me to take a signal in here, so I still consider this chop, unfortunately. So I probably won't be getting any trading opportunities to the short side until we break this low. But throughout the week, I did get a short opportunity above this line. After we had this failure to break this high and price began to roll over, I caught a nice little move in here, which I'll show you. I've mentioned I trade the 15-minute chart on this time frame, and I trade pullback entries. So I won't go into too much detail about my strategy, but basically what I was seeing here is I saw the price failed to break this high. You can see we had a false breakout, this nice wick, and then the price closed back into the range. Then we started to make lower lows, lower highs. Break this low, and then lower high. Then we break that low. Then we get this little consolidation period, lower high, and then we break this low. And unfortunately, I wasn't able to get involved in this pullback opportunity here, this engulfing candle, but I was able to get involved on this one. And unfortunately, with my rules, I wait for price to reach a 2-to-1 R profit, and then once it hits that, I wait for a higher close candle to exit my strategy, exit my trade. That's my strategy. And unfortunately, on this trade, as soon as price hit my 2-to-1 risk reward, it actually hit this daily level, and then had a nice big reaction off there. I think there was some news that happened that came out around this time as well, around 5 p.m. my time, and yeah. So I only got a 1.18 risk to reward out of this trade. When I closed the trade at the close of this candle, price immediately spiked back down as a result of the news. So I got lucky with slippage here, and I got a little more out of this trade than I was hoping. But unfortunately, I missed the rest of this move, and of course, we ended up rolling right over underneath this daily level. But that's okay. That happens. But if you look at this, this was a perfect structure-based trading opportunity right here. Look at this engulfing candle at this daily level structure, at this high. Great area to go short if you're a structure trader. You go short here, stops 12.7 pips above the high, 1 ATR. Around there. And yeah, look, you would have been able to catch a nice little pop out of that market up to 1.5 R. But anyway, hindsight's a great thing. But there's a strategy there if you have the patience to backtest it. Anyway, moving on. What's happening this week? Probably not much. We'll probably chop around in here for a while. I think we're coming lower, just the way price is looking. We've got lower highs, lower lows coming into this base of support. And I mean, look at this ugly price action. Price is it's not looking too healthy down here. Even though we're having a lot of rejections, we should have had more of a pop from this. We really should have come up to here from here. So, you know, price isn't looking too good right now. So we'll see what happens this week. The European elections are over. I'm not sure how that'll affect the market, but yeah. All right, moving on. US CAD. I also got a little, two nice little day trading opportunities out of this pair. If you remember, I'll play a real quick clip from last week where I explain what's going on in here, and then I'll run you through what happened through these couple of days.
But look at this, we're above the 50-week moving average, we're above the 50-day moving average, we're holding it as support. I mean, this is quite bullish. I would be surprised if price doesn't break and close above this red zone at 135 before it gets back down to this blue zone. But, you know, have to wait and see. That's why we're doing this. That's why we do analysis. I don't know what's going to happen, but I'd like to be prepared for all the situations that could happen, and that's one of them. That we continue to find support on this moving average and then eventually break up to the upside. I expect by the end of this week, the price will be up here somewhere, if not in this range.
All right, so as you can see, price did try to move lower, but it still found support on this 50-day moving average. And this wick would have taken out a lot of longs. A lot of longs involved in this. A lot of longs that are trailing their stops from down here below structure lows. Yeah, they got wicked out here. So I am actually anticipating price breaking higher this week, but we'll see. It's getting pretty choppy in here, so I don't think I'll be taking many more intraday opportunities because it's starting to lose. I'm starting to lose my directional bias, especially after this failure to close up at the highs of the range. But anyway, let's run you through how I used my analysis last week to take some trades throughout the week. This is big chop range, so I wouldn't be trading 4 hour on this unless you're buying and selling from the highs and lows of the range. But I trade the 15-minute chart, and let's have a look at the opportunities I got here. So after this big rejection from the 50-day EMA, price just rocketed up. I mean, as soon as I saw this, you can see down here that this happened overnight for me. It was like between 1 and 5 a.m. this move happened. And when I woke up the next day, I knew that I wanted to be getting long because after this reaction, I thought it was very likely we were coming back up to test the highs of the range. So I waited. I nearly got a signal in here, but because of this rejection wick, my strategy says I had to stand aside. I can't take engulfing candles in pullbacks if they have a rejection wick that's double the size of the candle body. So couldn't take that opportunity, unfortunately. But look at that. Soon after, I got a valid trade. I got this at exactly the same time as the Euro-Yen trade. And yeah, pretty much the same thing happened on this trade. I hit a 2 to 1R profit, and then we got a lower low, lower close engulfing candle. So I was forced to exit this trade next bar. But again, I got lucky on slippage, and this turned into a 1.5 risk R trade instead of what was it supposed to be? Not even a 1R trade. So I got very lucky there with slippage. But I'll take it. I'll take whatever luck I can get. Anyway, later that night, I believe, yes, I got another signal. Valid engulfing candle. Price is making higher lows, higher highs. We get a nice pullback, large engulfing candle, swing low wick. That gives me about a 45 to 50% chance of being correct, and I went for it. And on this particular trade, I adjusted my strategy. Initially, when I designed my strategy, I only took a fixed 2R profit, so I would have had a limit order just placed at a 2 ATR move from my entry. And this was a great strategy to learn to trade. But as I've gotten more comfortable with trading and in my own self, my own process, I've decided to limiting your profits not a great idea in Forex. So I changed my exit rule to have this lower low, lower close reason. But in this particular case, it was 11:30 at night, and I wanted to go to bed. So I just put my take profit in at 2 to 1R, like my old strategy. Plus we had this even handle number and this resistance level. After this huge run up, I just didn't see price continuing through here and just rocketing on. I had a feeling we were going to fail here, and then consolidate at least, if not reverse. So I wanted to get out of this trade, take my money, and leave the rest on the table. And if we got a break and close above these highs, I would have just found another reason to get involved, but we didn't. You see, price just rolled straight over, so that was a great decision. I got out at the perfect time, really, because price never went any higher, and I never got any other trading opportunities on this pair, according to my rules. But anyway, that was all possible because of the analysis I did at the start of the week. You know, I was bullish on this pair. I knew that this moving average was likely to act as support. I knew that price was likely to struggle at this zone. When we got this big pin bar reversal, I knew that the next daily candle was likely to be a big green one. So, yeah, that's what consistency does for you. As you do this top-down analysis consistently, you'll find that you'll just make more sense of the markets. You know, you'll feel comfortable. It's like having a map. You know, if you go walking out in the wilderness without a map, if you're anything like me, you're screwed. You're going to get lost. It's the same with trading. If you don't map out your territory before you start trading, yeah, good luck. Trading is very difficult to make consistent money over the long term. So if you're not doing this properly, and even I'm not doing it as well as I possibly could be, because I've only been trading for 3 years, so I'm still learning all of this. But it has definitely changed my trading massively. So this is super important that you learn how to do this. And I should mention now that all these levels are still holding. So this week I'm looking at the same levels. None of them have been broken. If I'd had a break and close above this level, that's why I also draw out these extra support and resistance on the outside, so that, you know, I don't have to touch this for probably on this pair, probably a few months. I mean, these levels will probably hold for a few months until new levels form. But anyway, that's top-down analysis. Draw out your support and resistance zones, identify the trend, and drop down to your lower time frames and look for entry reasons in the direction of your overall bias. And then be smart when price gets into decision zones. These are essentially decision zones where the market has to make a choice. Is price justified in going above this range? If it is, it will. If it's not, it won't. And in this case, it wasn't justified, so it didn't. And the market made their decision. It's not going higher yet. Moving on, euro dollar. I also got a long trade out of this. I'll play a clip from last week, show you what I was seeing here, and then I'll just quickly run you through this trading opportunity I took. If we get a break and close below this 4-hour low, there's plenty of room to catch a nice little move down to support. So I'll be looking for that. Likewise, I don't really want to be going long here because the daily trend's down. I mean, even this time frame, look, we're going from the top left of the chart down to the bottom right. Even though it's a lot of waves and a lot of volatility, it's a bearish trend. So going long isn't the best idea. But in saying that, you know, there's plenty of room to go back up to resistance. So if I get a convincing signal, I'd probably want to see price break above this high before I took any signals above the 1 hour 50 EMA. But yeah, that's it. All right, so what did I do here? When I did my analysis last week, price was hovering around this zone, and I was fairly confident we were going to get a break and close below, and then a test back into this zone. I didn't know what was going to happen once that happened, but I knew that where price was, it was much more likely to fall a few more pips into this zone than to jump up into this zone. And sure enough, price did roll over and test this zone, but then there's obviously a hell of a lot of buy orders in this zone, because look at the size of the wick and the rejection candle. Classic daily double bottom pattern. This changed my bias immediately. Obviously, the trend is still down. We've got lower highs and lower lows coming in quite clearly. I mean, there's no confusion here. This is a downtrend. Yet this is a very powerful reversal signal. And so because I trade the 1 hour chart, just because the daily is on a downtrend doesn't mean that there's not room to catch a move on the intraday time frames based on this analysis. And so as I said last week, I was waiting for a break and close above this range before I were to consider any longs. And I wasn't favoring longs on this pair at the time because I was expecting price to come down here. And I was also expecting price to break lower, potentially come down to 110. But it didn't. You'll see we got a couple of breaks below, but price just didn't hold. And we had a lot of wicks. I was watching price as it did this, and I just knew I was unlikely to get a pullback entry in here. And even if I did, after we got this reaction off this level, I didn't want to be going short. I mean, look at this. Again, this happened overnight, so I wasn't awake for this big move. But when I woke up the next day and I saw this happening, I thought, that's interesting. We're consolidating at the highs. If we get a break and close above this zone and a pullback into the zone, above the moving average and an engulfing candle signal, I'm going long, even though I said I wouldn't last week, because my bias changed based on this move off this support level. And I thought we had plenty of room to come up here into the 112.3 to 112.5s. So I went long. We got this pop, we got this break and close. We failed at 112, which concerned me a little bit. But then we rolled over and I got this big engulfing candle in this zone. Even though this is a bit of an ugly pattern, price is bullish. We just made a higher high and somewhat of a higher low from here. This is a classic reversal pattern, especially on this time frame. And so yeah, I went long next bar. It actually took me half an hour to decide to take this trade because I was being a little too subjective. But then when I thought, does this trade meet my trading plan rules? It did 100%. So I just took it. I jumped in, and then sure enough, overnight, this was Friday night, it hit my first target. I didn't want to hold this trade over the weekend with the European elections going on. I was a little worried that we might see if something crazy happened and some lunatic got elected that no one wanted elected, then, which is very likely to happen in today's current political climate, this could have easily gapped, against me quite a bit. And because my stop loss was at break even, if it gapped below my stop loss, I'd still take a loss on this trade. So I was a little nervous about that. But then this morning, I got up early to close the trade out on Saturday morning, but I missed the close by about 20 minutes, half an hour. So I was stuck in this trade all weekend. And I wasn't very happy about that. But today the market's open. I think the elections are still going on. The results haven't been announced yet. So price hasn't done anything. And that was a false alarm. I had nothing to be worried about this time. So I'm still involved in this trade. I'm still long from here. My stop loss is at break even. And I'm going to see what happens here. I'll be surprised if price can get above this high. But with this strategy, I trail my stop below swing lows. So if we get a break and close above this little high here, I can move my stop up a little bit. And, you never know. You never know with this pair after this bullish reaction off here. It's looking interesting. I wouldn't say it's bullish. It's far from bullish, but I don't think there's no downside momentum here. The momentum right now is to the upside. So yeah, I'm happy to be in this trade right now and catching this little bounce. We'll see how it pans out this week. I'm not expecting much out of it. I'm expecting it to break even, but one target winner. I'm happy with that. Last pair, real quick. I didn't get any trades on Aussie yen. Levels are still holding. Price didn't come up here like I thought it might throughout the week. And now we're just consolidating at these lows. We've double bottomed here. So I reckon we'll probably see another pop out of this market, especially if the S&P 500. Let's have a look at that real quick, because that affects the yen pairs quite a lot. When this is in a down, when this is freaking everyone out, people buy yen. Don't ask me why. I'm still learning a lot about fundamentals and money flow, but that's what happens. And so if this fails to break this low and holds here and starts to move higher, I reckon we'll see a nice pop out of Aussie yen and possibly even Euro yen. But we'll see. We'll have to wait and see what happens there. Anyway, like I said, I didn't get any trades on this pair, so I'm still waiting for something to happen here. I'm waiting for price to break and close below this or above this. Where price is right now, if we get a break and close above this high, a convincing signal, I'll consider going long up into this zone. Yeah, but it'd need to be a half decent break and then a clean signal to go long before I would consider going long out of this chop. But we got higher lows coming in here. If we break higher and form another higher low above the moving average, that could be a nice signal that we're going to get a bit of a bounce out of this market. And yeah, that's it. That's it for this week. My analysis hasn't really changed. I'll just go to the daily real quick. Look, all the levels are still the same. I'm looking for pullback entries in between these zones, and when price gets to these zones, I'm just waiting to see which way the market decides to take price. Same with this. Still stuck in this zone. Still stuck in this zone, and still stuck in this zone. As soon as one of these zones break, I'll do a follow-up video and I'll redo all my analysis and run you through what I'm doing. And if I get any interesting trading opportunities this week, I'll make another video about that too. All right, that's it. Happy trading. Good luck next week, and I'll speak to you soon. I just saw my cat run past the door. He's not allowed outside, so it looks like he's escaped. I better go get him. Thanks, guys. Have a good week.